Todd, what are you seeing here when it comes to the levels, when it comes to certain support numbers that we all should be watching for as we watch tech tumble?
Yeah, absolutely. Court, I think we have S&P up first, and then I'll move into NASDAQ if that's okay. Just looking at the long-term chart, and I speak this way to our investors, say, let's just take a step back and look at what's actually happened. And you think about everything that is happening right now, 4-decade high, inflation, geopolitical, political environment, so much going on. And we're only 17% off the highs in the S&P, right? So if we are going to roll over, the hot CPI number does look like it's going to punch us through. You have to look at the breakout level pre-COVID, right about 3,400 in the S&P. But I think we're focusing on tech. And again, if we look at this longer-term NASDAQ 100 chart, right, there's two main areas of support longer term. There should be a moving average on there. It's a 192 period moving average, and that's just 48 business weeks times 4. It's basically a presidential cycle moving average. That comes in at about 12,200. Then you have uptrend support, just a simple trend line at about 10,005 in the NASDAQ. So those are longer term supports. But if we break down to the daily chart of the NASDAQ, sort of a ski jump pattern, I call it. We've sold off sharply. We moved through channel resistance. We're coming back to hold support. And that could be an area where we do find support, again, with horrible sentiment out there, right around 11.9 to 11.5 in the NASDAQ. I'm not giving up all hope. I'm still constructive here.
We're right in the middle of that range right now on the NASDAQ, right? No, I'm sorry, we're above it. No, that's the NASDAQ 100. The overall NASDAQ was about 11.7, right?
Right, yeah, this is the NDX 100, Ty. So right now we're trading 12,148 in the NDX. So again, 11.9, 11.5, 11.7. This is the area of support. We've come a long ways off the lows. And again, everything that's happening right now, a lot of talk about interest rates and the dollar and all these macro impacts on the NASDAQ. We can go in any direction you want. But again, I'm staying bullish, and I'm not a long-only manager. In my RRA, we have been short. We can put hedges on. So I'm not just talking my long-only book. I can go to cash, but I'm still constructive.
One of your longs is Tesla.
Tesla, I like it. Everything that's going on with Elon and Twitter, and you talk about the valuation, but again, you look at the charts, and that's why a good combination of fundamentals and technicals, I think, serves you so well, especially in a volatile, emotional market like this. The lower part of that chart, this is Tesla divided into the S&P. It's uptrending. Tesla is stronger than the broader market. It's unbelievable. If we could break up through right about the 400 level, it's about, 350 is the level. That's the breakout. That should take us back to all-time highs. You look at everything that's going on with Tesla. I mean, just unbelievable numbers reported compared to GM and Ford. The margins are 3 times the amount. They're making more money with like a half to a third of the cars delivered. And you look at consumer discretionary, guys. Some of the consumer discretionary and tech sectors, believe it or not, with everyone gushing about energy, are still on a quant model stronger than energy in here. And I've just listened to everyone talk about energy. We've seen a rotation into growth, and there's a lot of industries within consumer discretionary, travel and auto parts and autos and Tesla's right there. There's a lot of relative strength. So I don't want to be a cheerleader, but I'd say let's temper our emotion on the downside right now.